even Saudi Arabia. So if you look at the world demand-supply situation, you find that supply is rising just as fast as demand. During the 1980s and the 1990s, there was no jump in the average price of oil. The average price was around $25 per barrel. Demand went up even at that time. But since supply also went up, there was no big rise. There were fluctuations in the price of oil, but no big rise in its price. It fluctuated around $25 per barrel. But since 2002 or 2003, supply continues to rise to match increasing demand, but oil price is rising at the same time. Well, what's happening? There is no shortage of oil anywhere in the world. If there was physical shortage of oil, then you could understand the rise in its price. During the 1970s, there indeed was a physical shortage of oil caused by the OPEC monopoly. At that time, in order to fill up your car with petrol, you had to stand in lines. Your car had to be in line for almost an hour because there was shortage of gasoline. But do you find any petrol lines anywhere in the world? At least I don't find any petrol lines in the United States. There is absolutely no physical shortage of oil and gasoline here. So why is this price so high? Well, when oil companies merge, they close down many gas stations. So you don't have as many gas stations now, as many petrol pumps available now as in the past. Competition sharply falls among those petrol pumps. When competition goes down, they feel safe to raise that price. You'll be surprised. I have drawn a chart which looks at the oil price and the oil stocks, the stock of oil, the inventory of oil in the United States from 1990 all the way to 2006. Or is it? Yes, 1990 all the way to 2006. Now, I don't know if this chart is clear to you in this video or not, but there is the oil stock is represented by a straight line from 1990 all the way to 2006, and you can see there has been no decline at all in oil stocks in the United States. If there was too much demand relative to supply, then the inventory of oil should fall. That's an obvious cause. That should be obvious, that if demand is much greater than supply, then the stock of oil in inventory should fall, but there is no fall at all from 1990 all the way to 2006. But then look at the other part of the chart which shows what's happening to the oil price, and see, since about 2002, the oil price is just jumping. It's rising sharply. It did not rise much or was fluctuating until about 2002, but now, ever since 2002, it has been going up and up, even though the stock of oil, the oil inventory, is more or less the same. In fact, this year, the oil stocks in the United States, oil inventory, has risen by 10%. Well, even now, the per barrel price of oil, the price of oil per barrel is $75 versus $25 that it used to be in the 1990s. So it shows that the major cause of the rise in the gasoline price or petrol price is not the shortage of oil, but something else. And I think it's the monopoly power exercised by the oil industry. Now, some people say, well, maybe oil is expensive because production cost is rising. It's very hard to discover new oil, and it costs a lot to discover it. Maybe that's why the oil price is rising. Well, if that was the case, then oil profits should have fallen. It's a simple rule of economics that if cost of production goes up, the profit for the company falls. But we know what's happening to the oil profit. Exxon and Mobil combined used to earn about $10 billion per year. Now they're earning more than $40 billion per year. So if the rise in the cost was the reason for the high price of oil, then their profits should have fallen, not risen. So that's not the real reason. Then somebody comes up and says, well, there's a lot of tension in East Asia. In America we call it the Middle East. In India they call it East Asia. There's a lot of tension in the Arab world, in East Asia, and that tension is raising the price of oil. Well, to them I say this. Was there ever a time in the last 30, 40 years when there was no tension in the Middle East? There has always been tension in the Middle East as far as I can remember. So why is the price rising now and not in the past? So this is again a phony reason. The real reason is that oil is expensive because the oil companies have made campaign contributions to the US government, and the government in return is not enforcing the anti-monopoly laws, not enforcing the anti-merger laws, and that's so competition has basically disappeared in the oil industry, and oil prices rising and rising fast. So this is a case of official corruption, and it's creating poverty. Why? High price of oil creates poverty for everybody, especially the poor and the middle class. And unfortunately, this type of corruption in the United States creates poverty all over the world. See, normally corruption creates poverty inside the country, but this type of corruption creates poverty around the world because people in India also have to pay very high price for petrol. People in Japan and China also have to pay a high price for petrol because the American companies have raised that price themselves. There is only one oil market, so when prices go up in the United States for oil, they go up all over the world. So this is just a simple example of how corruption creates poverty. I could cite many other examples in the United States and in other parts of the world. I don't need to go to mention that there is so much corruption in India and how it throws back the cause of economic development, how it creates shoddy products and reduces wages and creates unemployment and so on. I don't need to go back and go into those. A lot of people know about that. But there are many other reasons for poverty in the United States. For instance, take the case of the minimum wage. Now, official policy, again, official version is that the rise in the minimum wage to catch up with rising prices will simply create more unemployment. Well, the real reason is this. The rise in the minimum wage means loss of business profits, and the government has been bought out by businesses. That's why they don't want to raise the minimum wage. In 1969, the minimum wage in America in terms of today's prices was $8 per hour. Nowadays it's less than $6 an hour. In fact, it was close to $5 an hour between 1997 and July 2007. So they kept saying, well, if you raise the minimum wage, even though prices are rising, they create inflation. But look at what the US Congress does. It raises its own salary every year. That doesn't seem to be inflationary to it. So it's purely corruption, official corruption.